Hey, good afternoon, everyone. It is about 2 o'clock. Let's take a look at what the markets did. But before we do that, I want to give you just a quick update on the rest of the week. So a lot of you know we have a funeral on Thursday with visitations tomorrow. So I'll be out of the office tomorrow and Thursday and back in at work on Friday. We'll just have to play it by ear, see what the markets do to see if we need to do another video. But at a minimum, you should expect a video sometime Friday, and unless it's critical tomorrow or Thursday, I would expect not. And if you can't get a hold of anybody at the office, it's because people attended a funeral. So anyway, with that, let's take a look at what the markets are doing here. This is new crop soybeans. We have traded down into the 1.382 extension of this move here. So if you measure from the low in October to the high right here, and you say what is 38.2% of a full retracement of that, that's this line right here. Here's 61.8, common area to reverse from. Now this is an inside day. We didn't take out the high or the low from yesterday. And so it's not anything in and of itself other than we do seem to be finding support right at this 382 level, which would be a perfect place to reverse, or a common place to reverse in a wave 2 position here. If I take this just a bit further and let me put this retracement level on too, you can see where we retraced from this move, from the May to July rally. We have reversed right at the 61.8% of that. So you've got dual Fibonacci support zones right here from this rally and from this rally. So the decay from the November 21 high down to today is coming right into Fibonacci support. And on old crop beans, we actually have a little bit more bullish setup. Where are they? Here. Nope, that's new crop 24. Oh dear. Okay. Let's look at them right here. H24. All right, so here is old crop beans, November beans. I'm going to do the same thing. Here's your May to June rally. May to June rally here. We're reversing right on the bottom side of the 61.8. And then if I put the same relative retracement on this bar right here, you can see we're also traded to the 1382 retracement level of here. Now, a fourth level, you have 38.2, 50%, and 61.8. A fourth and very common Fibonacci retracement is the 78.6 level, which would be just a little bit lower. So we've actually fallen all the way down into beyond 61.8, we've fallen near the 78.6 level, and we're right at the 1382 of this secondary rally, or this wave. So all of these Fibonacci clusters right here are finding some support, and this one does have a small hook reversal. If we can climb back above yesterday's high here tomorrow at 1261 on old crop, then I think that you could say that's a tradable low, and obviously we got to get back up above the 1282 level and close this gap. But anything from anything above yesterday's high at 1260 is a buy signal in our book, and something that shouldn't be overlooked. It's not necessarily saying, hey, go out and re-own your whole crop, or be overly reckless. It's just saying we've come down to a level where a common retracement level would be found. Okay, and then you can look at that in context of what corn did today too, which is also fell down to a new low. We did poke out a new low here. Yesterday's low was at 452. This morning's low was 451 3/4, and then we reversed it and came right back up. Now we stopped short of a bullish engulfing day, and we stopped short of double closes, but we did at least get piercing patterns on corn as well. And so that's where something could start from. This isn't enough for us to really jump in, but we did modify some positions today. For those of you that had old crop corn that were in puts and short calls, we bought in the short calls and dropped our puts down to the 460 level in order to keep that upside back open. So we were able to capture, the bulk of this move here, and now if we do rally, we'll capture it again. But we'll just stick with the process here and not overtrade it. Again, this wasn't enough just to lift hedges completely because it's just a hook reversal. So we'll have to see where it goes from here and how it behaves to determine whether or not we have a tradable low. And to me, in my book, a tradable low comes into place if we get back above 470 on a closing basis, or maybe even 473. So it's got a little bit more work to do to get very excited about it, but you can't get excited, and you got to start somewhere. So you got to start down here. We do have a report on Friday, and it's a loaded amount of information coming out Friday from WASDs to stocks reports. It's just a lot of information going to hit the market on Friday, so we'll just have to see how traders digest it. New crop corn, same as new crop soybeans. Inside day did not punch out a new low, but did climb back above this prior low back here. So what does that mean? Well, they're moving consistently. New crops are trading somewhat the same patterns, and old crops are trading somewhat the same patterns. I really like that setup. So if we do get some buying back up above the 495 level, I think we put pressure on 5 and maybe higher. So I'm not taking any action on the long calls that we have. We're short futures. I'm not going to lower those. I'm not going to lift them yet. We're just going to be patient and wait and see how we trade. And yeah, the report on Friday really does play into that, because you can't just hold short futures and just leave yourself exposed when you already own the calls. I think that makes sense to just sit where you are and be patient. Now wheat. Let me start with old crop wheat before we go to new crop. So this is March wheat. Really like this setup here, and I'll show you exactly why. I really like the trend channel that's developed through here, which is this entire sideways to lower chop and slop here has been overlapping. It's been sloppy, it's been corrective, and it's been contained within parallel lines when we're in a wave 2 position with massive bullish divergences that formed from August all the way through November. So I think that the next move of significance in wheat should be to the upside, but we're not there yet. We got to get up above the 450 level on a closing basis so we can challenge it higher. Where might wheat go? I'm not exactly sure, but some Fibonacci targets. If you do the same analysis that we had back here, your 38.2% retracement of the decline is all the way up at 789. And our 61.8 retracement is all the way up here at 908. And then if I take it from here, from this level, it lowers, and you got your 132 off of this move here, up here at 701, 704. So I would say that if we're able to punch out this 650 level, we're probably looking at a rally of significance somewhere up into this Fibonacci zone near between $7.50 and $8. I think that's a reasonable target. It's not a guarantee that that gets there at all, of course, but if you're just looking at Fibonacci relationships, then I think it makes sense that that's where it could go. And if it props up above this level here, then there may be something more significant at work that would be pushing us. It's a little counterintuitive because we've gotten so much moisture here in Kansas over the last several weeks. But markets do funny things, and just because there's moisture on the ground doesn't necessarily mean that we have a monster wheat crop, and it doesn't necessarily mean that we have a world oversupply situation. So I think wheat could get interesting here if it's able to poke back up above this level. I'm not interested in chasing to the downside here just because of the divergences and the oversold condition and the short that the funds have. It's just too much for us to chase down to the downside. In fact, we're really looking to reestablish some sort of long position from this area here, thinking that we're going to get back up into this area. So it's a nice risk reward and a nice spec position to look at. Okay, new crop beans, and from a hedge perspective, where are we? We're in the same exact position that old crop is, except it's pointing even higher, right? Your 132 and 168 extension off of this rally right here is counting up into the 720 level. If I come from down here to the 38.2, you've got a 760 new crop wheat number, which is right back up into this natural chart resistance and sitting in a fairly nice spot. the 61.8 is all the way up here at the 851. And so what I really like about all these numbers is that they tend to line up among multiple waves of decay. So I think that a rally, if and when it develops, could get explosive because the fund position is short enough that it can push this thing a very, very long way in a short amount of time. What will the catalyst be that puts us there? I have no idea. But right now, that's what the technicals are hinting at. It's definitely not a guarantee. It's absolutely subject to change based on lower prices. But for today, that's the best analysis that we can come up with. So what does that mean? Well, it means that if you've sold all your last year's wheat and you want to re-own it, this is a great spot to do it because you've got limited risk. If you want to be patient on new crop, that's fine because we should get an opportunity to sell quite a bit higher here in the coming months. So with that, I'll be quiet. That's 11 minutes of talking. Remember, this is the last video until Friday because we're going to be out. I'll be out tomorrow and Thursday. I think some of the rest of the office will be out Thursday potentially. But if you need us, call us on our cell phones. We'll try to be responsive, and we'll for sure be back in the office on Friday. So I hope that makes sense and I hope that's helpful. We appreciate your patience there. Remember, there is risk trading futures and options, and you should only do so in light of your own financial condition. I hope everyone has a great day. We'll talk to you on Friday. See ya.